Good afternoon. Today is Tuesday and is February the 13th, and the time right now is 1:35 in the afternoon. And overnight, we see U.S. equity continue to charge into fresh all-time high ahead of tonight's very important CPI numbers. In fact, this week, the key numbers will be CPI numbers and the PPI numbers beside the retail sales. So expect some kind of volatility going into tonight's trading. So we can see overnight in the cash index, in terms of the Dow Jones Industrial Average, we can see fresh highs just below the 39,000 handle. And this is causing me a little bit of nervousness because I think the market may not be able to hold out much longer. And I'm very, very aware that market is overstretched and is very vulnerable to pullbacks. So be careful. I do not believe this market has seen its top yet, possibly not yet, because the momentum has been somewhat lacking, no doubt, but over the long term, you can see that the market refused to come back down. So we need to see a catalyst that will cause the markets to unwind big time. So far, everything is lovey-dovey. Nobody is expecting a recession, and this is where the risk actually lies. When the whole world is not expecting something, and when the numbers do not match, that's where everything will unravel. So be very careful chasing these equity markets much higher. So we can see that in the futures contract, which is the micro E-mini Dow Jones futures, which is a little bit more telling because the speculators are all centered on this particular index here. The market has already traded above 39,000, unlike the cash index. Of course, there is a premium in futures contract because we're talking about time delay, right? So do look out for some kind of reversal signals in the futures contract rather than the cash index to look for clues if the market is going to be able to hang on. But by and large, I see that the volume has been tapering, and my view has not changed at all. I still believe that the market is diverging, and divergence is actually very prominent in what we call a fifth wave rally. If for any Elliott wave tactician out there, you will understand that fifth wave is usually the last major impulsive wave before the market corrects. So this is my fear here, is that the market right now is so vulnerable and it is actually ripe for a correction. Okay, in the cash index, in the S&P 500, we see that market continue to charge higher at 5,048.39 in the cash index. Again, we do not see any evidence that the market is about to tank anytime soon, although the structure here is definitely overstretched. But when we look at the futures equivalent, which is the micro E-mini S&P 500, which is one of the most actively traded, we can see that the all is not well. We have a high traded at 5,066.5 overnight, and the market is coming back down. So this suggests that the market may be looking to come off regardless of what happened tonight in the CPI numbers. And if the number misses estimates, it's going to be all hell breaking loose. And we can see that the volume traded over the last few weeks has been tapering, and this is where the danger lies, in which the volume has not been supporting of the rally in this particular market here. In the Nasdaq 100, same thing. We have a high here at 18,041.45. And this is suggesting that the market is still very much on the upside. However, when we look at the futures contract, which is the micro E-mini Nasdaq 100, which is one of the most actively traded futures contract at the retail level, suggests that the market is turning down because we have a reversal pattern here at 18,121.5. So the Nasdaq 100 is actually right now very vulnerable to a pullback. And let's see what happened tonight. And over in Asia, we can see that the Nikkei 225 continued to charge higher, just under the 38,000 levels, with a high of 37,920 this morning. The futures contract traded in Osaka Futures Exchange, and again, it is not showing the corresponding increase in the volume. You can see the new high is not matched by higher volume, which is definitely a sign of weakness going forward. Now, Hong Kong remain closed for the Lunar New Year, and it will reopen tomorrow. So let's see what happens. But basically, I think the market wants to go higher. The Chinese market, in particularly the Hong Kong market, has not been moving in tandem with the rest of the world. We can see while global equity markets continue to charge higher, led by Wall Street, we can see the Hong Kong market, including the Chinese equity market, has been trading southwards. Okay, so now that the market is looking a little bit vulnerable on the Western equity index, the Hong Kong market may have a chance to rally because it has been trading in opposite direction to the rest of the world. So if this is actually what is going to be what I think it is, I think the market may actually rebound to at least 16,800 and possibly gravitating towards the 17,000 levels, which we have to see a cluster of closing price in recent months, October, November, December, all basically closing around the same levels of 17,000 points, okay? And over in the dollar, we can see dollar continue to trade sideways with a little bias to the upside, but I still look at this structure as being unfinished business. The pullback from 104.46 does not look complete to me, and I think it is still vulnerable to trade to the downside. But however, if the market do trade lower into 103.64 to 103 half level, that could present a buying opportunity. Again, we have to look for confirmation in a lower time frame to see a reversal within this bracket of prices before we should go long, because I think there is still a little bit more upside in the dollar index here. Correspondingly speaking, because the dollar does look a bit vulnerable right now, so we may be able to see the principal currency rallying a little bit. So we can see so far the euro dollar has bounced off the low of 107.23 and traded to a high so far at 107.68, and this does not look over yet. I still believe that there's a good chance market will go up and test a 108 even to as high as 108.25 levels. And if that's the case, look for some kind of selling signal here to do that confirmation in line with the rally that I'm expecting in the dollar index after it pulls back, okay? And in sterling, we can see sterling is a lot more robust, and by and large, I hope that the market can go out a little bit more. Before going into this, I was actually still maintaining a somewhat bullish outlook on the sterling, but this decline from 127.70 to 125.18 actually destroyed that short-term view. Now I think the market may be looking to trade first go higher, but I think the top side will be about 127. So if you are holding long position, then maybe you should look out to exit at 127 or just under just ahead of 127. Okay, in Aussie remains vulnerable. This three-wave bounce from 0.6469 does not look complete to me, although we have an overnight high at 0.6528. I think there is still scope for the market to inch up a little bit beyond last night's high, to ideally into the 0.65 half to 0.6570 levels to look for confirmation of a reversal, and then to sell. I think the market has the potential to go all the way to test the 0.64 levels over time. And dollar Canadian remains bullish, although I have been stopped out of my long position, which I held for more than a week because of this pullback here. But I'm looking to reestablish a long position because I think there's still scope for the dollar Canadian to actually try the 135, 136 levels. So look out for a rally beyond the most recent high at 135.45. Okay, dollar yen is a bit of a dilemma. I think the market is very cautious heading towards near the 152 levels. So upside is, to me, for now, looking a little bit limited. There is the risk the market may actually pull back. But again, overall, the dollar remains very, very firm. So again, I have no view for dollar yen for now. I think overall, despite the cautiousness shown over the last few sessions, we can see that the general mood is to take the dollar yen higher over time. And over in precious metals, we can see precious metal in gold has actually come off quite a fair bit. And if I can extend this a little bit further, we can say that there's these two tops here, which actually forms a very form a price channel, and prices right now is trading just under the midpoint level. That make it very vulnerable. The market cannot rally beyond this last night high at $2,021. There is a risk that the market may actually turn around around current price of $20.20 and head towards the hits below $2,000. So there's a real risk that the market may actually continue to trade lower. And if that's the case, one level to look out for will be $1,973 to $1,985. So this could be one target to actually aim for. Over in silver, it does looks a little bit different. Silver does looks to be a lot more firmer, and I still maintain my view from yesterday that I think the bounce from $21.91 is likely to unfold in a three-wave pattern, targeting somewhere at $23.54 to perhaps $23.87, which is very close to the which is within the December close of $23.78. So I think silver should be a buy, and gold should continue to be a sell. And in oil itself, we can see that the escalation in the Middle East, largely by reports that Israeli military has actually launched a operation, or not, I won't say operation, I think a frontal assault on this southern city of Rafah, which is in the border town bordering Egypt. I think they are trying to flush out Hamas militants, but the problem here is that all the refugees has been concentrated in the south. So if this is going to be an all-out military operation, that could bring very unacceptably high civilian casualties. So this is actually causing oil prices to surge overnight. You can see high traded at $77.25. I think the momentum will suggest we probably will see higher prices. But if we do get a pullback, that will be even better. I have not been able to reestablish my long position. Ideally, I do see I'm still hoping now, we'll see it. I was still hoping that the crude oil prices in terms of WTI can come back to about $76.30, ideally below $76, even marginally for me to enter in a long position, because this Middle East situation does not look like it's going to be over anytime soon, and any kind of escalation is going to cause an increase in crude oil prices. Now, Bitcoin is actually taking the center stage. You can see Bitcoin finally broke the $50,000 level. The first time it actually did, and this is the highest level since 2022. So the high traded this morning at $50,372 is actually very near the 1.618% extension of this initial move from 38,514. So you can see this could be 1, 2, and this is definitely very impulsive. This is definitely part of a 3, and if this is the case, then any kind of pullback should be a buy, because we still have one more rally to go to finish this entire 5-way sequence. And if we do get a pullback anywhere near the 50,000 to 49,800, that could be your last call to actually position a long for the market to extend higher beyond the 50,371 that we've seen so far. So this is all I have. Remember, tonight is CPI numbers is going to be pretty volatile, and I shall see you tomorrow. Bye-bye. Take care.